Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking rates, and those 10-year note yields just keep creeping higher. It was a big move, highest we've seen, highest weekly settle we've seen since early August. And I, despite the fact that we saw a move from roughly 2% up to 222, we did not get above that psychological 2.25. We never even really threatened to test it. So we may be nearing the top yield-wise of this range. So the selling in bonds may be close. We did have some pretty poor auctions this week, which helped kind of fuel yields a little bit higher than they maybe would have been. But I think ultimately we're kind of at that point now where are we going from here? And if you look at volatility, where volatility is back in the what we'll call the no care zone. It's back at the lows. December volatility, which we've talked about, kind of dancing around 4%, is now well below 4%, which to me suggests there's not only any fear in the market making a big move, there's no care. You look at where equities have seen some better, higher days. We look at some of the other commodities around. We've seen oil up, we've seen gold down. It's been kind of a mixture. But really what we've seen after this big bull run in treasuries, we've just seen kind of a shrugging of the shoulders, and volatility is not really part of the game. It is cheapening up some options, which would be attractive to those looking to put on, sort of macro picture, macro moves, whether you buy a put or a call. But however, I think that ultimately right now, volatility is telling you the market is not fearful. And what's going to happen next week with the Fed? The Fed's going to talk about the balance sheet, and that's going to have a direct impact on the Treasury market. It depends on what they're going to do with their reinvestment, what they're going to do with their holdings, how are they going to look to make trim that balance sheet. Well, it was once below $1 trillion, now north of $4 trillion. That's really the key here. How are they going to do that? And if they're going to flood the market with supply, how is the bond market going to accept that? So it's going to be a lot of talk next week. We're not going to see a whole lot of action, but we need to see a plan from the Fed, and that will directly impact the capital markets itself. So volatility is low ahead of a Fed meeting. I'm not really sure that should be happening, but it is. So I'm a vol buyer here with the idea that something could happen at the Fed meeting, good or bad, that's going to push this market well north of 2.25 or back to 2% by the end of the week. This has been Todd Colvin coming to you from the floor of the CME Group.